Hey, what's up guys? Thank you for tuning in again. In this video, I'm gonna tell you that I have pulled the trigger. So I was sitting on a lot of cash, more than $45,000, close to $46,000, and I have pulled the trigger to buy 39 more shares of SPY, which is S&P 500 index. And this index ETF that you see here, my average cost is now up $555, close to $555. I've invested over $36,131 in it, and I have gained over $384 on this ETF alone. The thing that I look at, I have gone through multiple things. I've been wondering about how should I invest, what should the strategy be, and I'm generating roughly about $250 to $300 every single week by selling cash secured put on SOXL or any other long-term stock that I want to hold. But I was not able to get the market swings, and I was not able to gain the market swings that I've seen. So year to date, SPY is up almost 19%, and over the past 50 to 100 years the average return is 10%. But since it fluctuates, some years are down 20%, some are up a lot. So it was a time that I was thinking that if this is what's gonna be my biggest holding, how do I want to get in? Because I don't want to put all my eggs in one bucket. But if you look here, if I would have been a dollar cost averaging along the way, I would have made a lot more money. I would have been in positive for a lot of percentages. Probably my average cost would have been around 500 or something, because you look here, it was in high 400s here early this year, not too far back. And then of course the fear of losing money is always there. Today we have Fed meeting today and tomorrow as well about the rate cuts and all. If the rate cuts happen, which is more than likely, if 25 basis points happens, then what's gonna happen is two scenarios for that. If they have predicted that they're gonna start reducing the rates aggressively, then the market would ideally be going up and aggressively. While if they say that only 0.25 is the basis point the rate cut's gonna happen, and they don't predict for forecast as a good forecast, then inflation and with all of the things going on, recession is imminent. So if that happens, then of course market can take a dip from here. It's at all-time highs. If you look at SPY, all-time high currently here is $565. This is not only 52 weeks high but all-time high as well. So I pretty much bought at the peak of the market, but that's the thing, that's not the only cash that I had, because if you look here, I also am containing 9 contracts of SOXL at $25.50 per share, which gave me around 20 cents per share. So I made $180 here. So I'll keep targeting $180 to $200 every single week by selling cash secured puts and covered calls. Along with this, I also have 100 shares in SOXL, so I am selling covered calls at my strike price, basically the price at which I bought the shares as well, which gave me a lot of money as well. So I'm generating roughly around $80 to $100 here every week as well. So $80, $100 here, and then $180 to $200 here is about the amount that I wanted to generate passively from cash secured puts and covered calls, because I want rest of the money to be in the market, and that's what I did. That's why one of the reason of pulling this trigger on buying 39 more shares, cost this is $36,000 now invested in S&P 500. One more thing that I noticed, I've been following passive income investing channel. Adrian there, as well as I've heard Warren Buffett about investing lump sum versus investing daily cost averaging. But I think both are good strategies. All-time high, I was little hesitant because the market is at all-time high, so investing even 50% of my cash reserves at that time was little scary. But since I've pulled the trigger, it's all said and done now. Can't go back now. I now have 64 shares of SPY. Target is to have 100 shares by the end of the year, so I will have 100 shares of S&P 500. I have over 104 shares of QQQ. I have also have some 30 odd shares of QQQM as well. On the dividend side, I have 515 shares, so that gave me roughly about $110 per month in dividends. So SCHD dividends, when they come around $300 every single quarter, over 300, so that is pretty much $100 to $125 every single month. So $125 here, $250 here. I am making roughly $350 to $400 every single month. That basically is hitting my account, which I can use. But right now I'm aggressively spending and reinvesting that money back into the stocks, and want to build a portfolio where I can retire early. This is my financial freedom portfolio. Other than this account, I also have Roth IRA and 401k. That will be in some other video. I hold different holdings on those as well. The strategy, the future from here on for this account would be trying to aggressively get to 100 shares first of all, right, for SPY. So I'm say 36 shares short, so that's the target before the end of the year. If we see a dip, I'll invest more. If I go under my cost basis, which is really high now, considering the all-time high is just $10 more than my average cost, but if that happens, if a dip happens, I will be buying more aggressively and maybe cutting some cost from here, selling cash secured puts and all, and maybe investing more in SPY. And then the second thing would be once we hit this SPY 100 shares target or goal, I will go all in on XDTE and maybe a little bit in QDTE as well, and try to build a strong position in those two as well. My portfolio has been hovering around 160s for quite a bit, I believe for a couple months now, being up and down, but I want to have a consistent cash flow, which is gonna be achieved through the XDTE investment. I'll be reinvesting 20 to 25% of that, buying back more shares of XDTE to get the snowball going, because I want to avoid NAV erosion on that, but at the same time I will have the growth side of my portfolio helping me grow my portfolio as well. So that's the plan. I hope you guys like this video. If you haven't already subscribed to my channel, please do so, and I'll see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.